Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed but very muted markets around the world today. Europe mostly flat with the DAX just down about 0.25%. Asia flat as well. A lot of boring action overseas, right?
That's a key word, muted and boring.
Boring.
Sometimes that's good, but sometimes it just makes where there's not that much opportunities. And I guess you could kind of look into it where, with Europe being flattish after the decline that it's seen over the course of the past week or two, I guess you could kind of think that's somewhat bearish. You look here at the EWG. We've talked about this. The trend in the DAX that has been pretty much trapped in a downtrend. It did try and tag the 200-day and then fell apart. And for the DAX not to be able to bounce back today and fill this gap below the 8 and 21-day, I guess you could interpret that as it being pretty weak. And if you look at the FXI, which is kind of a proxy for Asia, it also never got to the 200-day. And now this little ascending channel here that that was intact is now somewhat broken. I wouldn't say like drastically broken, but it's kind of faulty. Now the longer it stays on the right side, the more or the higher the probability it can go lower. So at this point, quiet markets without a sharp bounce back, I guess it's showing you that maybe a pullback could happen even further versus the quick type moves like every other time, like we came in, bounce, came in, bounce. This time we came in and not much interest here. So I guess we could interpret that as slightly bearish.
S&P futures are at 5 to 6 handles with the bounce back in oil acting as a small catalyst. What are some of your levels here?
Yesterday the S&P broke the 8-day. So for me, I'm like, okay, that's a small change. And then we closed yesterday, and then all of a sudden after hours, oil bounced, and the spiders were just kind of grinding higher. So we'll see what happens today. The futures were actually up like almost 10, and now they're only up, about 4 or 5 handles, which is good because I'm actually short the spiders today. Not big, but up 10 handles, it might have been a little bit more of a problem to deal with versus where it is now. But anyway, you look here at the SPX, and at this point, you had your big double bottom down here. Then you had your first move up. I like to just go over this to show you how patterns repeat themselves. This is when we reclaimed the 8 and the 21-day moving average, got above resistance, and then pretty much rode it this entire time. So right here does seem as if, for the first time, it broke an upper level and actually closed below it. Like here, it broke an upper level, and then reclaimed the 8-day fast. Here it broke an upper level, reclaimed it fast. This time it didn't. So we'll see what happens here. You do have some resistance at, I guess, like this 2058. So if it stays below 2058 and rolls down, I think some people would add to shorts if all of a sudden we got below this 2042, because below that, then all of a sudden you have the 8-day down here and the 200-day down there. And if you look at this descending channel that we kind of broke above, it would actually be nice to come in and retest a little bit of lower areas, because it will make people think like they're not chasing. But anyway, 2 days down, we're trying to bounce. We'll see what type of bounce we have. If it reclaims this whole bar, I think you got to almost just cover and be done with it. If it only gets up to like 253 or 258 and turns lower, I think some shorts will sink their teeth in below this 2-day pivot, which is Friday's low and yesterday's low.
Most sectors look the same off highs of their recent moves but haven't fallen apart. What are some levels do you think in the Qs and small caps?
Now that, like what you just said, makes it kind of complicated because they're a little bit off highs, but haven't fallen apart where you feel like you're buying a big dip. And recently, if you shorted after 2 down days, you haven't had much success. So this spot again has me kind of just like blah. If that's is that a technical term, blah?
Maybe.
Maybe. All right, well, that's what it is. I'm kind of feeling blah. Well, anyway, with that being said, here is some support in the Qs. Okay, this was your, that big Friday engulfing bar that just got taken back. And so I guess as long as the Qs stay below this 109.50, that would keep some of the short-term bears in control for maybe a push down to the 21-day. But if we push above yesterday's high and stay above it and close above it, I guess some shorts will, cover a little bit. So, sometimes you'll push above, come back below, and that'll create a lower pivot high. And then if we were to break this, you see some more downside. So at this point, 2 down days doesn't start a new trend, but again, after a huge move like we've seen, some guys just aren't in a rush right now. And if you look at the small caps, kind of similar thing. Never really took back the 200-day. This is where it stalled. We closed below the 8-day, so if you happen to have gotten out of some of your longs, that's fine. You never know what's going to happen next. And now, I would say at this point, here's the 21-day, which held right there. So if the IWMs are able to reclaim and get above this 109.86, I think some guys will probably cover if they went home short. But again, watch for them to push above, come back below, create like a tail here. If that were to happen, where all of a sudden you have a high, a lower high, then below yesterday's low, people kind of might press for a move to the 21 days. So at this point, it's getting kind of choppy here, where you just have to continue to take your trades, but the overall trend from the low is still intact with a little bit less momentum.
The bios, which since last week acted better, showed signs of life yesterday. Are you all done with your options here?
I am. I got involved on that Thursday when it first perked up. I talked about my day 1, you buy, day 2, you add, day 3, you sell. Then yesterday, when it looked like things were going to be really weak, I was like, you know what, I'm done with the trade for now, and I'll just trade the ETFs versus sitting in the options, because at first, when they're just perking up, I didn't want to get caught long the IBBs overnight if it was going to not work out, because it was a lagging group. So the options gave me at least a medium where risk is premium paid. So you look at the chart now, from where that bounce started. So at this point, it started down here, okay, and that was a nice 3-day move. The options went from like 510 to over 11. Yesterday, I think got rid of the rest, somewhere around 9 and change. Well, anyway, you are seeing a bull flag type pattern develop here. So if the IBBs could hold above, just say 267 for another session, maybe instead of options, and it starts to trade through, I'll buy through this 273 to 275 for continued upside action, because there's, in my opinion, some room to at least this 285 spot, and then some think that if the market hangs in there, the second quarter could be the time for the bios, and it could see a little bit closer, to the 300 area where the 200-day will be coming down to.
Banks have been very weak, but with the Fed minutes coming out at 2 o'clock today, it could be worth having a look at. Will you focus on JP Morgan and Goldman Sachs?
Those are the two, those are the two big names. So you don't need to be in all of them, and they all kind of have the same patterns where, they're below the 200-day. There's not much life, with a dovish Fed and rates not going higher. There's less ways for them to make money. And although everyone in the government in Washington wants everyone to think that the banks are a bunch of fat cats, but the last 5 years I think there's been more layoffs in the banks than in most other sectors. But anyway, so if you want to look at something, come 2 o'clock to see if there's some action. JP Morgan, not acting so great. You could say it's still holding the 50-day. You still have this upper channel, but there's just no power there. It's below the moving averages. It's weaker. It's below the 200-day. So, I guess see what happens for today. If all of a sudden, she's real dovish again and JP Morgan starts breaking below this 58.20, probably will add some pressure to the banks. If they sound a tiny bit more hawkish and it gets above this little spot here of 58.83, it just pops back in the range, and then the bears won't have the banks, to use as a headwind for, downside prices. And if you look at Goldman Sachs, it's been a weaker stock for so long. Look how long it's been below the 200-day. Every time it tries to go, it fails. Last time was right here, kind of got above it and then quickly negated it. At this point, if the bears want some fuel, you're going to have to see something like Goldman Sachs break this. Okay, so right down this spot, this low here from yesterday is 154.55. We'll see if this holds. If it holds and bounces, then this is just not a headwind, but kind of in the mix. If it breaks below this and starts to really get hit, then maybe that'll pressure the overall market.
High beta tech has lost some steam since Monday's down move in Facebook. Do you think they're at a crossroads here?
A little bit. You had a strong move in high beta tech. Most dips have been viable. You've had some tight patterns, and now they're starting to lose a little momentum. If you remember, on Monday we came in long Facebook, and Facebook had the news that Oculus was going to be delayed in their shipments, that they were having some components shortage, etc. Plus Deutsche Bank downgraded, and that got me out of my swing trade in Facebook. So now the question is, do they hold in or really get downside? So let's start with Facebook. Facebook, first thing, gave you a reversal near the highs here, right? Remember that reversal right there? Some say this was your small red dog reversal, but came into the 8-day, bounced on Friday. This is when we all went long, and then here was that news. So, I got out of it when it broke this spot, and now it's hovering on the what's it called, the 21-day. So this, I think, is the line in the sand for now. If it stays above this 111.60, it's fine. Maybe it starts a new trend to the upside, kind of like, remember when this broke here, everyone said it was game over for Facebook. Well, it came in, pivoted, and then just started again. So here we came in, same type of, multi-bar move, and question is now, does it, hold this and go back up, or does today it opens up 30 cents and starts to break below this? Because if it breaks below this, all of a sudden sentiment might change in high beta. I would say if you're shorted, if it were to get above and stay above this 113.32, or if you're flat and looking for an entry, then all of a sudden popping back above that, would be a bit more constructive to keep this upper range intact. Some other stocks in high beta land broke its upper range but didn't fall apart. You have Amazon, which got below this 588 but didn't fall apart. I guess now use 585 as your pivot for support. Here is resistance. Again, from a huge move like this, not the end of the world, but you never know if it's going to start to intensify. Google hasn't really done much at all, giving you any types of trades recently. I'm not even going to go over those levels. I think Netflix for today, at least it's tight, and that's something that I'm going to focus on. We had a really nice trade when it took out this 101, 102 area, and since then, it's been kind of stutter stepping higher. It held the 8-day again. So if the market does want to be strong today, for a trade, perhaps this gets above this 105.75, 106 for a continued move, and that would then reclaim the 200-day. So at this point, you have a nice trend off the lows with some tradable spots. So, this you could take a little bit more size. It's not as loose and wide as a Google or an Amazon, so you could have some more control with the movement.
Apple hit a high of 112 and change on Monday and has since pulled back. Do you think there's anything to do here, or do we just need time to kind of reset up again?
Reset up. I'm not long, I'm not short. Yesterday I was thinking about buying the dip, but just didn't really move fast enough at this point. It's had a big move, and maybe some of the buybacks are starting to diminish. It's gotten a little slower. It got rejected the 200-day the first time there. Maybe next time it takes it out. I think it was upgraded today. I'm not sure, but anyway, you look at the chart. It's going to need some time. This was a nice, compelling spot right here. Okay, and then there was another nice, compelling spot when it engulfed this range, and you had this gap up, and now it's still hanging in there. It's still above the 8-day and still stronger than a lot of things out there. So the trend's still intact, but you now have this upper flag where just a matter of how long will it stay in here. I guess for sentiment purposes, if it were to get above yesterday's high of 110.73, maybe that'll help tech. If it stays in here, the longer it stays in here, the better of a potential like flag type pattern for better movements. But for something like today where it's up 30 cents, I'm probably not going to trade it much. If it goes red and trades below yesterday's low, here's your 8-day support.
Tesla has been an animal. It started red in the morning yesterday, and then it finished really strong. Do you think traders should have this on their radar?
I think every day there's big moves in Tesla. You just can't have an opinion on which way it's going to go. Mm-hmm. Some people think, oh, it's a short, it's a rich man's car, and some think that with the new model out there, that all those reservations that it's going to be a lot more than that, where it's going to be pretty much mainstream in the next 3 to 5 years. Ultimately, the price in the stock is expensive, but technically it's been holding in there real well. Yesterday we were down 8-9 points, and like Chelsea said, it was an animal. You have the 8-day that held technically, okay? So if you were flatted, that was a good spot to look to buy. If you said, okay, I'm going to wait to see if it reclaims the prior day's low, that could have been your spot. And if you were short, that could have been your spot to cover. And anyway, closing the highs. So this morning, it's off a few dollars, $2 or so. So I would say, go to your 5-minute chart, where you could see, some support. So I would say support 1 here is right around this 254. So, and then support 2 would be 252. So I'd say around 252. If it holds that, maybe you buy it for it to go green. There are a lot of people out there now saying that, the highs of the year, which are right here, this 275 will be taken out. And at this point, you've had a really nice strong trend. So until it breaks the 8-day and closes below it, get short off the brain.
There's news that the Pfizer-Allergan merger is officially off. Do you think there's opportunities based on this?
There was a firm that came out that said Allergan on its own, should be like $50 higher. So maybe once the dust settles and they just go on their own, there could be, a decent trade here, I believe, in this AGN. You look at the AGN, you'll see that, you had the big gap down based on, the news from yesterday. Today it's down a few dollars because of that. So maybe, if it puts in a 15-minute low or a 5-minute low or a 30-minute low, you trade versus that, and then at some point, it gets above this for, a gap fill. So there might be a trade there if you haven't been caught. If you look at, where the stock's been, 340 or so, $100 higher with a gap that's defined in front of you, it could be worth a look. Maybe even go out 2 months and buy some calls. But I live in Short Hills, and there's definitely Botox in demand.
Yes.
And I'm sure it's everywhere.
I'm sure, yeah, definitely.
So, which is why I guess Pfizer was so intent on getting them. So at this point, trade versus that gap, and I think there's an opportunity because sometimes one man's trash or bad situation could turn into an opportunity for everyone else.
Right. And now what about oil? We have a number at 10:30 today. Do you think some guys went short DWTI yesterday since we had that small red dog reversal?
The red dog reversal. Have you heard about
Red
that
dog?
topic?
Red dog? Do we have a red dog reversal yesterday?
We did have one, and I didn't trade it, but I think some guys were looking at it because oil was oversold, and it's been bouncing ahead of the actual numbers. So anyway, you look at this chart here. Every time you've had some kind of reversal, whether it's here or here, you've had down moves, even here. So yesterday you had a small one where it traded above a prior high, which was 193.52. Got to as high as 197, so when it went back below it, you could have got short there. You would have been 5 points in the money with your risk. And if you took a little bit home short overnight for some follow through, it's down like $13. And now, we'll see, I guess, what happens here at this 170 area. So if you have it overnight covered, nice trade. If you look at the USO, it'll be interesting to see whether or not oil itself, which you also had a red dog reversal here, can reclaim, or if the USO gets rejected or reclaims this, just say 950 area. 950 is pretty important, I would think, to see whether or not it can get back above it. It's been slowly declining since losing the 8 and 21 day, which is, which was like 1030. And also I would watch the XLE today. XLE closed on the lows. This definitely has that head and shoulders top pattern look. Sometimes it comes back up and retests. So I would say, here is a pretty big spot, that 61.31, which is it's basically all the moving averages that are curling down now. So if you happen to have been short overnight, and you're looking for a spot to add, this could be the spot to add, and that's also a spot to measure. If it breaks through this and goes above it with authority, then just cover, because remember when the IWMs looked like it could be a potential head and shoulders top, well, when it broke this right side here, that was a good spot to cover versus, just sitting in there and just, spending time in pain, because we don't like pain, Chelsea.
No, we don't. Do you have any other final thoughts as, we kind of talked about we have the Fed minutes coming up today. Market's in a tricky spot, a bit uninteresting. What do you think?
I think I'm going to do a little less today. I come in short the spiders, so if all of a sudden, the market starts fading, then maybe we add through some of those spots. But if we hold in here and grind higher, I'm going to probably look at, some of the high beta tech names. I'm going to see if Facebook could get through 113.35. If it can and squeezes above it, chances are market's not going to get too much downside. I'm going to look at Netflix, see if it could take back the 200-day. If it can with volume, maybe I'll get in there. And then when the Fed minutes come out, are the feathers going to be in the, flying, or are the hawks coming out? If it happens to read very hawkish, maybe you get a quick trade in the banks long. If they happen to be very dovish, we'll see whether or not the market tries to rally on that, and if the banks are too weak to let that happen. So lots of little things and dots to connect. At this point, I have a lot less going on than I've had in the past week or two, and I doubt that's going to change much today. The speed has been changing a little bit. Maybe it's because new monthly flows are starting to diminish and quarterly flows, and we're getting closer to earnings where the buybacks are also diminishing. So it's just creating a low volume environment where if you do too much, you're going to lose money when you don't have to. And that is not what we like to do. We don't like to lose money when we don't have to.
No, we want money.
Yes, money is good.
Yes. Thank you, Scott. Everyone, have a great trading day.